All right, welcome to tonight's review class. This is Go Capital, like you all know already, and we've begun a series of topics in the basic course, and we are done with the basic course. So this is just a review class for you to ask questions, for you to let me know what you have understood so far, and for me to also fine-tune your understanding of what we have done so far. Please, it will be a very interactive class, so I would like us to really maximize the time so that we can discuss some issues really much tonight. And then if we are able to finish this review class, we can begin the advanced class on Thursday. Like I said, the advanced class is going to be here on Zoom, so only people who can connect with us will be able to learn on the advanced class. The advanced class is a bit technical, and I don't want to just do YouTube videos like just post on YouTube and you go and watch. There are many videos on YouTube that you could have been watching, but why am I here? To teach you what I do. So I would like you to be seeing it like the way it's supposed to be seen. So I'm not going to just do YouTube videos and send to you again. So I would like us to be meeting here as we used to meet before. So on Thursday we'll come to begin the advanced class, and then on Sunday we'll come back, we'll do another lesson. Let's see how far we can go by the end of June, if we can go far, or probably we'll complete the advanced course. So if we can complete the advanced course, then I'll take you into the master class. As the master class is not going to be it's not going to be long. It's just going to be maybe 2 or 3 classes, because in the master class I'll be talking about trader psychology. I'll be talking about what is most important in the market. It's not just about the strategy that you have. So the basic course is about the foundation. The advanced class is going to be the strategy that you'll be using. I'm going to be teaching you the strategies that you'll be using, not strategies. Strategy. I use a particular strategy to trade. So, and that particular strategy that I use to trade is what I want to teach you. There are a lot of things on YouTube that you can lay hands on, a lot of things, and at the end of the day, because you are not guided, because there are so many things, you end up being confused, you end up not knowing what to do and what to use. I actually started like that in 2019, and I've spent a lot of money. I've wasted a lot of accounts. I have bought a lot of indicators. I've spent money. Believe you me when I say I've spent money, I've spent quite huge sum of money. When you quote it in dollars, it looks very small, but when you quote it in naira, you will know what I'm talking about. I spent a lot of money close to 500,000 just on indicators, just on strategies, on different things. I've been taught a lot of things by different persons. So what I'm going to be teaching you in the advanced course, I'm not the creator of it per se. I do not claim I don't have the I do not claim that I'm the one that developed the strategy, but because I have paid for so many courses, because I have learned a lot of things, I've been able to deduce what works for me and what works. So most of the things I'll be teaching will look like something that somebody else invented, something that belongs to another person. So the copyright belongs to them. But the thing is, I paid to learn it, and I've spent a lot of years. I've used experience to harness them, to bring one or two together to make it more easy for me to use. So I can still say that I have a lot of input on it. So teaching it to you is actually something really maybe a privilege to you guys, because it took 3 years of back testing, of learning, jumping from one strategy to the other, to be able to get to this point where I can teach you what I'm using. So, and what I'm using works. So then in the master class, you are going to be taught how your mind can be guided around that strategy, because it's not just about having the strategy. You need to have the mastery of the strategy. How do you master the strategy? So that will just be what I will do in the advanced course, in the master class, maybe about 2 or 3 classes. So I want to throw the floor open now for questions. All right, I have done basics, quite a number of topics, over 20 topics if I'm not mistaken. Yeah, more than 20 topics so far. So anybody have any question? If you have a question, you can just drop your hand on the chat room. Then let me unmute you. Anybody with any question?
Boss, me.
Okay. Ask your question.
Yes, on the aspect of leverage.
Yes.
Yeah, can someone have a leverage of 1:1 leverage?
1:1.
Yes, 1:1 leverage. That is one volume.
Yes, I talked about 1:1 in one of the videos. 1:1 is actually the same with saying your broker is not assisting you with any borrowed funds. 1:1 means you are using what is in your balance to trade without any assistance or borrowed money from your broker. So 1:1 is the same thing as trading with your account alone. So if you're registering with a broker and the broker is offering just 1:1, it means there's no leverage there. Is it clear?
Yes, boss.
Okay. Someone is saying the videos were so self-explanatory, so maybe there's, from his aspect, there's no question. All right. Is there another person that have another question? I know that many questions will come from the aspect of leverage and margin. So, okay, let me see.
Hello, sir.
Okay, sir. I can hear you.
Yeah. Now, concerning this leverage thing, what's the relationship between leverage and the profit you get from it at the end of trading? Not just the calculation. I mean leverage and peak movement, because leverage and lot size rather. I think what's the difference between lot size and leverage, sir?
Okay, let me put up my whiteboard this time to see. Let me share my whiteboard. All right, you can see my whiteboard. Okay, so the question that Solomon was asking before, he was asking that what is the relationship between leverage and lot size and how it affects the account. So just in order for me to answer the question, I'm going to start by doing this. We said that leverage is borrowed money, and we are assuming that you have a balance. Let's say you have a balance of $1,000 in your account. You have a balance of $1,000, and the broker that you registered with, when you're registering, you shows a leverage. You shows a leverage of let's say 1:1,000. Sorry, 1:100. Let's use 1:100. Are you guys still here? Okay, so this is the balance. The balance is 1,000. Then the leverage is 1:100. How does this affect lot size? Remember, we said that one standard lot size is equivalent to 100,000 units of that particular currency, of that particular asset you want to trade. So if you are buying one standard lot size, it means you are buying 100,000 units of that particular asset. So if you want to buy 100,000 units, let's say you are buying the US dollar, it means you will need $100,000 to buy just one lot size. You will need $100,000 to buy just one lot size. Are you getting me? One lot size is equal to 100,000 units. So now if you have a leverage of 1:100, what this means is you don't need a whole $100,000 to be able to buy one lot size of US dollar. So remember that for this example, we are using the US dollar, for example. We are using US dollar, for example. So if you are to buy one lot size of USD, it means you actually want to buy $100,000. It means you want to buy $100,000. So you don't have up to $100,000. So you cannot buy one lot size, because what you have in your balance is 1,000, and what you can buy is 1,000, but you want to buy one lot size. So how possible can that be? So with an account of 1:100 leverage, or whether you call it 100:1 or 1:100, however you twist the pronunciation, is the same. So if you have an account that has a leverage of 1:400, what that means is your broker only need you to deposit 1 out of 100 to be able to buy one lot size. So that means if you divide this 100,000, which is the one lot size, into 100, your broker only need you to put just 1 of that 100 into the margin. So that is, your broker is assisting you with the ability to trade times 100 of what you have. So now let's say this is one lot size of USD is equal to $100,000, and you want to buy that one lot size, but your balance is 1,000 and the leverage is this. Now it means your broker is telling you that divide this one lot size into 100. That one lot size divided by 100 is going to give you 1,000. Am I correct?
Yes.
It's going to give you 1,000. So it means your broker needs you to. Your broker will lock away this 1,000 as the money, as the margin required for you to buy one lot size. And also, from my knowledge of trading, I know that it is not possible, because it means you'll be using the whole of your balance to enter, even with a leverage of 1:100. Do you get the idea now? But let me explain with another example. Let's say that how do I duplicate this thing now? I wanted to duplicate this to just make it fast. Oh God. I'm looking for a way to duplicate this one. I don't want to type again. Alright, no way. Alright, so now let's say this time around, now you have an account balance of $10,000. That's what you have. I'm just trying to make it fast by not retyping everything. So, and the same leverage, you still have the same leverage of 1:100. That's the same leverage you have, and you are still going to buy one lot size. What we are trying to say is, for you to be able to buy one lot size, your broker is going to divide this one lot size into 100 and take one part of that 100 as your margin. That is what margin is. That's how leverage affects your lot size. You can actually see now that with an account of $1,000 that has a leverage of 1:100, it will be impossible for you to trade one lot size. You can't trade one lot size. So, but should in case the account is $10,000, for example, and the leverage is 1:100 like this, what your broker is going to take from you in the margin is still going to be 1,000. That's what your broker will still take from you. Am I correct? Let's divide it. If you divide this 100,000 by 100, yes, it's 1,000. So if your broker takes 1,000 in your margin, how much will you have remaining in your free margin? You will still have 9,000 remaining. So I don't know whether you get the idea. I need your response. Do you get the idea?
Yes, we're following. Yes, we can see.
So I'm trying. Okay, let me look at it again from the beginning. You have a balance of $1,000, and the leverage of the account is 1:100. Then you intend to buy one lot size. That one lot size that you want to buy is 100,000 unit of that particular asset, and we're saying, for example, US dollar. So if you are buying one lot size of the US dollar, it means you are buying $100,000. And your balance is just 1,000. You don't have enough to buy. And also with this leverage of 1:100, it means if you want to buy 100,000 units, you will need to submit 1,000 of your balance as margin for you to be able to enter the trade. When you now submit, when your broker lock away that 1,000 in your margin away, what will remain? Zero. So you will not have free margin at all, and that means you don't even have anything, any drawdown. The market should not go down, it should not go against you, there should be no spread. That's what I'm trying to say. And the trade should just go straight in profit. Your broker will not, in fact, it will never work. If you put an account that has 1:100 leverage and the balance is 1,000, you can create a demo account and try it. $1,000 with 1:100 leverage, I want to take one lot size, try it. It will not work, because the lot size is too big for that account, considering the leverage your broker wants to give to you. But let's assume that the leverage of the account you're operating is 1:500, for example, 1:500. Are you with me? It means since you want to buy $100,000, which is one lot size, your broker is going to divide this one lot size, which is equivalent to 100,000 units, going to divide it by 500. So should your broker divide this particular money, this 100,000 by 500 now, he will take one part of it away. So that is why you are dividing it by 500 actually. So now divide this by 500. What will you have? 5,000.
200.
Okay, 200.
200.
Yes, you will have 200. So it means your broker is going to take 200 in your margin. You will have $800 remaining in your free margin for market to still go up and down. So with a leverage of 1:500, you can comfortably take one lot size. But with a leverage of 1:100, you can't, because by that leverage, your broker will need $1,000 in your margin for you to be able to enter one lot size. So do you understand how leverage affects lot size now?
Yes, sir. Yes, I do now.
So
I understand it now.
If you,
So,
in
like,
fact, you need to know.
It is
said-
leverage
Yes,
that influences lot size.
Before
It's
you,
leverage
in
that will
fact,
determine the
normal,
lot size.
listen to me, normal, the first thing you should look at, first of all, when you open an account with a broker, is the leverage. Me, whenever I open an account with a broker, I normally use 1:1,000, because that will afford me the privilege to trade with small money. Are you getting me now? So, but I registered a challenge recently. You people are aware of that challenge, with myforexfunds.com, and that challenge they are giving the leverage is fixed on 1:100. You can't adjust it, you can't change it. And the account they gave me is $10,000. That's the account I registered for. So it means if I want to enter one lot size in that account now, the broker will lock away $1,000 in my margin. That money cannot be touched. It will just be there locked. So my free margin will be showing $9,000. Are you getting me now? So if I am making losses, they will be deducting the losses from the free margin like that. You know, the particular loss you are making plus your balance is the equity, or minus your balance is the equity. So if the free margin keep reducing, it means you are making losses. It means your equity is going down. In fact, let me tell you this: if you are making losses, your equity will always be less than the balance. I don't know whether you just got what I said now. If you are making losses, if the trade you are currently running on is in loss, your equity will be always less than your balance. But if the trade you are currently on is in profit, your equity will be more than the balance. So, and if you check your free margin, you will discover that the profit you are making is also part of the free margin, because the free margin increases when you make profit. The free margin also reduces when you make losses. So all of them are intertwined. And if you don't have free margin remaining to trade, it means your equity is the same as the balance, and your broker will close that trade. That's what you call a margin call. I've explained this one before in the previous video. So I'm only trying to make it practical by saying that if you have an account of 1:100 and you are taking one lot size with a $10,000 account, with a $1,000 account, it will not work, because your broker will, it means it's assisting you with 1/100. It means you will need 1/100 of that lot size to be locked as margin. So whatever lot size you are taking, divide it by your leverage. That will let you know what your broker is actually taking as the margin. So when you now minus the margin from your balance, that will make you to know what you have in your free margin to be able to trade, to run the trade. The trade I took today, how many of you saw the trade? Let me show you guys. I don't know if I can just put it up. Let me just give me some time. I want to show you guys something today, what I did on that account. I deposited that money on Tuesday. Are you with me now? On Tuesday, it was 50,000 naira that I deposited that in that account. It's a different account from the other ones I've been trading. So when I put the money there, it was reflecting as $85. Are you with me? It was reflecting as $85 because of the rate at which my broker is selling dollar to naira. Do you understand me? The rate at which you can exchange dollar to naira in that broker. So with that broker makes the balance to be $84. So what I'm trying to tell you now is I deposited $84 this last week, this Tuesday that just passed. Okay, so now let me show you guys the chart. Can you see my chart now?
Yes, boss.
All right, now let me show you guys the balance. Let me show you guys the balance. So this account was $84 on Tuesday when I deposited the money. So, and when I deposited the money, I entered a trade. The trade that I entered this one, this Euro card. I entered it here at the bottom here on a buy. For you to believe, let me put it up. I want to show you here I entered trade history. Can you see? Are you seeing this arrow here? Are you seeing this arrow?
Yes.
So this was where I entered the trade. A very sniper entry. So when I entered the trade, it was going in profit. But because I have a desire that I don't want to over risk my account, I had to close this trade. The blue line is where I entered, the blue arrow, because it was two positions I entered at once. I entered two positions of 0.02 lot size. So two positions at once. It was going in profit, but because of what was remaining in my free margin, I decided to close this trade. Imagine I was on this trade and it moved from here to this place. That would have been some money. Are you getting me? So because after I closed the trade, it kept going up. Was it going to give me profit? Yes. But why did I close it? I was over leveraging the account. I was risking more than I already planned that I would risk. I planned that the account, I'm not going to risk more than $5 per trade. Are you getting me? So as at that time, I was already risking close to $15. That was why I closed these two trades. So I now allowed this particular one to keep running. So I entered this particular trade somewhere. I was on this trade, this USD CHF, I think around this part. So I took profit here. Let me show you. Let me click trade history and show it to you guys. Okay, it was here I entered. Let me show it to you. It was here I entered. The arrow is pointing here. So I entered this place and I closed here. That was $3 profit. So I waited. I did not trade on Thursday. I did not trade throughout all these days. Then I waited till today, Friday. Then I entered this trade here and I took my profit here, just at the top. Are you getting me? Now, why am I showing you this? Because I understand that if I over leverage the account and the chart go against me first, it will stop me out. When it stops me out, it's not because the trade is not going well, but because there is no free margin for the market to run. So when I was entering this trade today, I was risking $7. Actually, there are two trades in that place. I don't know whether if I zoom it, you will see it well. There are two positions. You are not seeing it really clearly, but there are two positions in that place. So I entered one 0.02, entered another one 0.02. So when I entered that trade, one of them was $3.2 stop loss. Then the second one was $3.7 stop loss. And the account was reading 103 this morning because I made profit on Wednesday. So it was 103. So then when I entered those two positions, I was risking less than $8. And I closed this trade in profit of $30. I was risking only 8 and I closed it in profit of 30. So I deposited this money on Tuesday, traded only Wednesday and Friday. I traded only 2 days, Wednesday and Friday, and the account has left $85 to $133 because I was using proper risk management and I understood leverage. So if you do not have understanding of leverage and how it works and what kind of loss size you should be taking, you are going to see a trade that should go well, that should go in your direction. But because you think you are always correct, you think you know the market, you think you have the ability to take profit every time you come, you are just going to blow your account for no reason. It's not that the trade is going against you, but because there is no free margin for the trade to run again. So I have to show you this so that you know that even with small money like this, as long as you have the knowledge of your free margin and the knowledge of your knowledge of your lot size accurate, you can make money. Some of you will be thinking of using 0.1 lot size on that trade, maybe even 1 lot size. It will not work because of the kind of leverage this account is registered on. I can't even remember the leverage of this account now. I think this account is more ratio 1000 as well. So it gives me enough room to do what I want to do, but still yet I know what proper risk management is. Are you getting me? So that's how leverage affects your lot size. Any other question?
I am.
It's not too loud. Be audible.
I am, sir.
I can hear you. Talk.
Okay, sir. Concerning that lot size, just lot size, like lot size.
It's breaking. Oh, yeah, it's not clear. I can't hear you. Can you type on the chat room? I don't know if you'll be fast. Another person should ask as she's typing. Another person. Any other question apart from the one she's trying to type? Any other question? Okay, so this is the question. So let me look at that one first. Does one's lot size affect profit size? Yes. Your lot size affects everything. It affects your losses. It affects your profit. I told you people before in the classes, one of the classes, that one lot size is equivalent to $10 per pip movement. One lot size, if the market moves up 1 pip in your direction, you have made $10. I told you people this one before. One standard lot size. Lot size. So then, if it is micro mini lot size, which is a 0 denoted by 0.1 lot size, 1 pip movement is $1. Then if it is micro lot size, which is 0.01, which is the commonest, for the one I traded today is 0.02, then I entered 2 of it, which is 0.04 in total. I was trading 4 micro lot sizes. Do you understand? Today. So if you enter this type of trade, 1 pip movement is going to give you $0.1, or you can say 100 cents. So you can say 10 cents. Yeah, but let's use $0.1 for the sake of on the proper understanding. So today, now that I was making, I took a position of 0.04 in total lot size. That was my lot size today. So this will be equal to 1 pip movement is going to be equal to $0.4. That's going to be the amount. So, and I made a total of $30 in this trade. $30. So if you divide 30 by 0.4, you will know the number of pips the market moved. Can somebody just do it for us? Divide 30 by 0.4. Be fast.
$75 pips.
So it means the market moved 75 pips when I entered that trade. From my entry to my exit, which is my take profit, the market moved 75 pips. The first trade I entered on Wednesday, I entered trade on USDJPY as well. I did not show it here. On that particular trade, I took almost over 100 pips on that trade. I don't know if, let me just see if I can show it to you people as well. So this is my chart. This is USDJPY. I entered, let me show the trade history. I entered the trade here and I closed it here. So you can see I'm entering, I'm closing at the right place, the right time. You know, that's how you trade. I'm looking for sorry, don't mind me, I'm trying to, all right, from here to this place, that's 107 pips. 107 pips. You can see 1070. That last zero is not pip, is pipette. Are you getting me? So you can actually say 1070 points or 1070 points. Yeah, a point is 1070 points, but in pips it is 107 pips, 0 pipette. So market moves 107 pips in my favor. So I do enter trades that run as long as 100 pips, 200 pips, depending on whether I see the trade on time. Do you understand me? So for this particular one, I did calculation upon just now, I was able to take 75 pips today on USD CHF being Friday. Do you understand? So that's how the lot size affects the profit and the losses. Do you understand now, Esther? Do you understand? Are you still there? Can you still hear me, Esther?
Yes, boss. Go ahead.
All right. So let me look at the next question here. The next question here is, so what if someone trade on a small lot size, for example micro lot size? Will the trade still close you out? The only thing that will close you out of a trade is when you don't have free margin anymore. When you don't have free margin to run that trade, and that only comes about when you over leverage your account. So depending on the size of the balance, if you deposit $10, you will need to do all this calculation on that $10 for you to know how it's going to affect your profit and losses. So as long as you know how to calculate leverage already, you will be able to know which kind of loss size you should take per trade. And when we enter the class in our master class, because in the master class we'll be doing risk management and market psychology. When we get to that state, I will tell you how you need to risk just 1% of your account when you are trading. And no matter the number of trades you have that day to run, if you total all the stop loss together, let them not be more than 1% of your account. That's how to trade profitably. If 1% is even high, I know a trader in this world who, whatever he's trying to make at the end of the month, like from day one of the month till the last day of the month, what he is trying to make is just 1% of his account. But I'm telling you now that you should be risking 1%, meaning you are even overdoing what people are doing. So for me, I risk 1% every time to gain 3% or 6%, or I've entered trade that gives me times 10 before of my risk. Are you getting me? So I have entered trade that gave me times 11. That's the highest I've entered. I've entered 1:11 trade before. So depending on the way I train you on the master class, I'm going to give you instructions on the percentage of the account you are to risk. By that time, you would have gotten it clearer because you would have been placing a lot of trades on your demo account. So you would have had a first-hand experience of how it works. So when I start talking that time, it will not be strange to you. Do you understand me? So then the next question here is, you made mention of risking a particular amount when entering a trade. Yeah. That's what I just answered you now. So when you want to enter a trade, you make sure that if your account is $100, for example, make sure that your stop loss, if it takes you out, should the trade go against you, your stop loss should not be more than $1. So you are going to calculate the pips factored into your stop loss because you know that this is my entry, this is my stop loss. How many pips is in between your entry and the stop loss? That's what will determine the amount of loss size you will take to equal $1 should in case your account is $100. Are you getting me? All right, Rashid, you are raising your hand. What do you want to say?
No, sir, it was a mistake. No, sir. I don't have any question.
Okay, so actually we have less than 4 minutes to end this class, and I don't know if there's any other question, but I think these are the major questions actually that I was expecting from you guys, and you guys have asked the right questions. Okay, I'm listening.
Sorry, you made a last statement now that there's a percentage of money which should not be more than 10%. I didn't get it clearly. Sorry, 1% rather.
No, that is just a risk management strategy or a risk management approach. The way I was taught, my mentor taught me that when I want to trade, I should not risk more than 1% of my account. Meaning, if I have $100 in my balance, and I want to enter a trade, I should enter the trade in such a way that the lot size is going to be giving me $1 loss should in case it hit my stop loss. So meaning the way I will set my stop loss and the lot size, it should not be more than $1 because that $1 is 1% of $100. Are you getting me? So then if I'm risking that 1% to 3, that means if my stop loss is 1%, my take profit should be 3% or 2%. You will know all of these ones in master class. So that means if I'm risking $1, I am aiming $3. Are you getting me? So, but you can see what I did with this trade today now. I actually was not following that rule anymore because I knew what I was doing. I was having $85 in the account, yet I was risking about $7. Are you getting me? So that $7 is almost 10% of the account. Are you getting me? $7 is almost 10% of $85. Are you with me? So, and I was targeting $30. $30 is almost half. It's almost 50%. That's close to 40% of the account. Are you getting me? So, because I knew what I was doing and I want to hasten the process of the profit, I want to make profit quick, and I knew that I can handle the account that way. That was why I'm able to take that kind of trade today. Ideally, before, my mentor would not allow me to take more than 0.01 lot size on that particular trade. Are you getting me now? So that I can risk maybe about $0.8 or $1 at most. Is that clear? So, and if I have risked 0.01 lot, if it was 0.01 lot size I took, it means this amount now, this profit I made now, if you divide it by 4, it means I will be making like $7 instead of 30. Are you getting me? Or make it like 7.5 also instead of 30. So all of these calculations are things that will be in your brain because of the number of hours, number of time you spent practicing and trading. So I've been in this since 2019. So these numbers, I quote them like they are in my brain. Are you getting me? There's nothing to be crammed. It's just the way the account is. If you see the leverage and the account balance, you will just know the lot size you should take for you to risk only 1%. It's a simple thing, but you take your time to grab it. So you go back now, look at your account. The account we opened that day, I think it was 1:1,000 leverage we used, and we opened an account of $10,000, Abi. So now go and place a trade. Whether the trade is going to go in profit or loss, it does not matter. Just place a trade based on this understanding that you want to risk just 1%. 1% of 10k is 100, Abi. So if it is 100, or yeah, it's 100. So it means your stop loss will not be more than $100. Take your trade, calculate it in such a way. Just enter trades, be calculating the margin, the free margin and everything, how it is affecting that trade. You will have a proper understanding. Keep taking practices and you will just grab it all at once after some time. All right, with this, we've come to the end of the review course. On Sunday, we'll have our first advanced class. See you next class. I thank you so much. It's 10 o'clock.
Thanks, boss.
Time's up.